Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's October 13th, just after 2 a.m. Central Time, and Bitcoin is still doing its chop thing. So I want to talk about what I see on the big scale, also on the small scale. Also, I want to teach you a little bit more trading this evening or this morning, depending on when you're watching this. Simply because I feel like the more people understand about trading, the more informed they are, the better educated they are, the less risk they have with being taken for a ride by this market. But before I jump into the content, please do me a huge favor. Go ahead and hit the thumbs up button on this video and subscribe to the channel if you haven't already. I know it's easy to forget to do that. Sometimes I'm watching a video, I love the video, and I just simply forget. So when I see these videos and they've got hundreds of views and they have like 10 thumbs up or 20 thumbs up, I'm like, what's going on, people? So seriously, do please hit that thumbs up button. It goes a long way in making me motivated to do more of these videos. So what the heck is going on right now? Well, guys, I don't know, right? I don't know. What I will tell you is I'm still short. I closed about 40% of my short position. I actually closed it before I went to bed this morning, or yesterday, whatever you want to call it. I actually closed it, and I'm writing the rest. I still have a fairly large short position open. It's a few Bitcoin, and we'll see how this thing plays out. But what I wanted to talk about is, some people are getting super bearish right now. They're getting excited and they're wanting to go short. Same way a lot of people were getting bearish back here when it started to fall through support again. I'm sure people were thinking, oh, it's time to go short. But the reality is this thing almost looks like it's ready to go long on a short scale, on a small scale. Now, that doesn't mean I'll close my short positions. I will literally open long positions on a different exchange where I have a different portion of my trade fund if this plays out. So if we look at this on a 4-hour chart, we can see that we have this ascending trend line on RSI, on the 4-hour RSI, and it has not been destroyed. Every time it comes down of it, it just keeps bouncing off of it. It looks like it's getting a little weaker, so it could fall through there. Full disclosure, that's what I want to happen, but we'll see how that plays out. It is holding as support right now. The other thing that we have to be mindful of is we do have an ascending triangle forming on this chart. So what we had, we had this breakout, we had this big descending triangle, right? Coming down like this, we broke out of it, we came down and retested it and bounced off of it. That is actually a bullish sign when you bounce off the top of a triangle like that. So that was bullish, but I wasn't ready to go long there. So this has been playing out. This is an hourly chart, so this really started playing out a couple days ago. But it's putting in higher lows, and so far it's putting in fairly even highs right here. Our line of resistance seems to be right around that 8380 level, all the way up to about 8400. And if you guys remember, if you watched the past videos, that was actually the neckline of that W. I don't know if you guys remember that or not. I don't think I still have I don't have the chart anymore. It wasn't really relevant to me anymore. But essentially we had this daily W, right? Down, up, and our neckline was sitting right around here. So that lines up fairly nicely with the top of this ascending triangle. What's interesting about this triangle is if you measure it, it's about $165 in height. And if you measure 165 up from a breakout, that would give us a target of right around this line here. And look at this line. Look how well that thing lines up with the old level of resistance / support, right? It's a very logical conclusion that we might go up to that level. If so, it's not going to change my macro view, my bearish view on a macro level. I think it's entirely possible that we can still go up there and still continue down, okay? Now, the other possibility, of course, that we have to keep in mind is we could actually end up breaking out, okay, and going all the way up to, here it is again, the $9,500 to $9,600 area up here, okay? I really don't think we're going to go that high, and I'll tell you, there's a couple of reasons for that. The number one reason being that we got so harshly rejected. When we got up to 8,800, which was really, testing this old high over here, it just was slammed back down. And ever since then, the price has been fairly weak. So I don't think we're going to go all the way up to 9,500, even if we do break out. I think that maybe we would start seeing rejections, somewhere between 8,800 and 9,100. Maybe test this old support down here. or that tail, excuse me, not support, but that old tail down there. So, you know, I'm not really too worried about the running shorts I have. I'm certainly not going to close them, and I'm not going to get greedy and try to open them higher. I'm just going to let them ride because one of the mistakes that I made over the last couple of months was I kept nailing the calls. You know, for example, I said 13.1 would be the top of the bounce, right? So it hit like 13.8, came down around 9,500, 10 grand, and I said 13.1. And by the way, that's verifiable. If you're new to the channel and you don't believe me, you can go check TradingView. I posted all this on TradingView. I called 13.1 as the top, and then it actually topped at like 13.2 and went down. But I kept closing those shorts, right? I kept closing them after a day or after 4 hours, after 6 hours, etc. So I was taking these, you know, $300 and $500 wins per Bitcoin, whereas I could have been taking $2,000 and $3,000 wins per Bitcoin. So this time I said to myself, you know what? I'm going to let this sucker ride. I think it's going down to 4 grand. I think it's going down, you know, maybe even lower than that. I'm going to let it ride, and you know, then we'll see. We'll see where it ends up. And if I'm wrong and it goes up and starts suddenly bust out past 10 grand to the north, then I'll close it, I'll take the loss, and I'll learn from it. But all that is within, you know, it's within normal risk. It's not going to put me in any kind of undue risk where if I'm wrong, it's going to, you know, destroy my trade account or anything. But yeah, I think from a bullish standpoint, if we can break through this line, I think people would probably get pretty excited because it would break through that daily W. And I do think it's a very good possibility that it could head all the way up to, you know, this 85-60 target to kind of fill in this gap here that was created when it came crashing down. So that would be interesting. If that happens, I think we would probably see something like this, right? That's what I really think. I don't think we would keep going up. Like I said, it's possible, right? 9,500 is possible. 9,100 possible. All that kind of stuff is possible. Maybe a retestable high is possible, but I don't think so. I think we'd see, you know, a false break. I'd be watching volume to see how high volume was, and then a dump. If you guys are watching the volume, if you're not, first of all, you should be. But if you're not watching the volume, it's telling a very, very clear picture of who's in charge here. Let's get rid of all the... let's get rid of the lines for a second. Yesterday, we had that pump, and look at how tiny this volume was, right? There was a little over 3,000 volume on this bar. Now, to put that in perspective, we've had 5-minute candles where more trading happened in 5 minutes than happened in the entire 24-hour period yesterday. And this wasn't just any day. This was a Saturday. This was a weekend where volume is, you know, usually very, very high. That's the retail traders. Retail traders just were not interested in buying Bitcoin at that level, which to me says they're scared, right? It says they're scared, and, you know, who knows? Who knows where that's going to lead to? But that to me is a very, very bearish sign, okay? Also, don't forget, we're still under all these moving averages. We're under the 12 daily moving average. We're under the, you know, the 26 moving average. We're under the 200 daily moving average. So again, a breakout, you know, really far to the upside, 9,000, 9,500. We have to break through all those moving averages, including the 200 EMA. I just don't, you know, I just don't see that happening. There's my W. This is what I was looking for. Okay, so there's that W I was talking about. Down, up, right? And we just got rejected off of that neckline there. But again, if we're going to go up there, if we take a look at the 50 and the 200, this is the 4-hour chart here. Our 200 on the 4 hours of around $9,071, right? So maybe that's what we do. Maybe we do go up and test it. I don't think so. All right, not too worried about that. If we look at a weekly chart, I'm just going to go ahead and fix this scale real quick. Look at a weekly chart. I'm going to get rid of RSI. We're going to get rid of the moving averages, and we're just going to put the EMAs on there. Basically, what we did was we came up and tested this week, failed miserably, and got slammed back down. And, you know, I talked about in a previous video how this really looks a lot like this to me. Okay, I'm going to turn the moving averages back off. This drop out of the descending, out of the descending triangle, the drop, we had the dead cat bounce. Over here we had the descending triangle, we had the drop, the dead cat bounce, and then a move further. That is what this looks like to me, okay? The other thing that this is looking more and more like is the 2015 bear market. And here we go. I'm going to start talking about some of this old stuff again. I had a conversation. I really actually enjoyed the conversation because it was respectful, which is always fun. You know, I like having conversations with different viewpoints when people can do it in an adult manner, I guess. And somebody said that they didn't think that Bitcoin would go back down to under 7,000 because in a bull market, Bitcoin has never in its history, and I haven't verified this, but this is what they told me, that Bitcoin has never went under the 60 weekly EMA. So I said, okay, well, that's interesting. So I went and pulled a chart up, and in 2015, we had the big peak, just like in 2017. Excuse me, 2013 we had the big peak, just like we did in 2017. We had the dump, right? We had the cup, just like this cup. We had the descending triangle, just like this descending triangle, and then we had the dump. Now, this is not the dump of like this dump. This is actually the dump in the middle of the bear market in August of 2014. It came down to this 65 EMA, put in this dead cat bounce, and then moved further. And people thought this was the low back here around 342, and it actually, the bottom ended up being down around 167, about half of that. So now I'm looking at this going, oh, wow, that's really interesting. We're down right around that 65 EMA again, or excuse me, 60, not 65, but 60. We've got this bounce, which I think is a dead cat bounce. And if we break south of that, this almost gives more credit to the idea that we are indeed going to go down and put in a new bottom, that this was not the bottom at all, and that this is actually a relief rally, and that possibly go down and fill in this gap at 1350, right? So it's always interesting because when they presented that argument about the 60, it was supposed to be a bullish thing. And I looked at it and said, gosh, I think that supports my bearish view, if anything, right? Look how similar this is. I mean, look at this. Right through here, look at this. Okay? So that was kind of interesting. And, overall, I don't see anything that really screams, hey, let's get bullish, let's get bullish. I'll talk about this chart in just a few minutes here. All right, so sorry about that. There might be a little pause in the video there where I had to do some editing. I had to actually check on the charts. My alarm went off. This is what I'm watching for, guys. Still waiting to see if this bear flag plays out, right? We had the move down. We've got this bear flag, this ascending bear flag moving up. And, not ascending bear flag, but just the price of moving up in a bear flag, right? That's what a bear flag is. And then move down, put us down around 64.09. Now, I didn't talk about this in yesterday's video, the last video I did, but that 64.09 actually does, again, I always like to check to see if the targets make sense in the real world, and it absolutely does. If you look, I drew this green line here, and you might notice the green line doesn't match perfectly with 64.09. The green line is actually 63.80. So what's the green line? Well, the green line was the bottom of this tail that happened back in May that looked very, very suspicious when it happened. And it's also, if you look, it's like a nice line of support / resistance all through 2018, right? Even back here in 2017, this line acted as resistance back here, okay? So it's interesting that target happens to line up with that, and almost makes me wonder if that'll be the end of the correction. Now, I know I'm sitting here talking about, new lows and stuff, and that's a possibility, but this is also a possibility, right? That may be the correction. It may be that this thing finally just, dumps down here, consolidates, and moves back up. It could also be that it dumps down here and does one of these jerky moves where it's just real quick and then fires right back up. And if that happened, if it goes down here and fires back up, we'd probably fire back up to the mid 7,000 range. It may never come back down here, right? So that's why it's so damn important to kind of know about these scenarios up front and say, okay, well, if this happens, this is how I'm going to play it. And, if this happens, this is how I'm going to play it. Because, again, if we get down to 64.09, that's down in the golden reload zone. Remember, haven't talked about this zone a whole lot on the big scale lately because it's, out of sight, out of mind. But that would be the golden reload zone, which is where I always am looking for a reason to go long, right? That's where my bias is going to shift, and I'm going to start looking for long setups. Doesn't mean I won't still go short. Doesn't mean that I don't think it's going lower than that. It's just going to be that my bias is going to be, a bull bias. Okay, I'll be a little bit more skeptical of the short setups and a little bit more lenient on my bull setups. So that's what I'm watching on Bitcoin. Real quickly, I wanted to point this out. This was interesting. And by the way, this idea for this chart actually came from Brian Beamish, the Rational Investor. He was talking about, gold and how he wondered if, all the people, the gold bugs that were, blasting Bitcoin when it was in a descending triangle, if they were, feeling the same way about gold right now. And so I started pulling this up and started looking at some charts. And this chart here, obviously we all know this is Bitcoin. We know what this is. But look at this. This is gold, guys. Tell me how crazy that is. Look how similar those charts are, right? So I'm not short or long on gold. I don't have any gold. But I'm going to watch this. Gold plays out a lot slower, but I may be looking to short gold. I'm sure that sounds about insane. I don't even know if you can short gold. I'm sure you can. I've never traded gold before, so I'll have to check that out. I've traded silver, but never gold. So, and by the way, with silver, I traded on Robinhood. So there is no shorting on Robinhood. So I've never shorted silver either. So I thought that was pretty interesting. And then I was looking at EOS. This is EOS up here, and this is silver down here. And EOS and silver are resembling each other. We had this, pump, some consolidation, pump, consolidation, pump, consolidation, pump, right? Now suddenly EOS and silver are reminding me of each other. And of course, if silver plays out like EOS, I may get a chance to load up on some silver down here around low $15 range, which would be pretty damn awesome, right? So I wanted to share that with you guys real quick. And yeah, that's pretty much it. Okay, that's what I'm doing, guys. I'm just waiting to see if this bear flag plays out. If we break out, I may try to open a scalp long position. Again, I won't close my shorts. I'll just open a long position on a different exchange. And that's something I don't know if I talked about that in a previous video or not, but if you're not doing that, you might want to consider doing this. I split my money between different exchanges for the very specific reason if anybody ever were to hack me, which I don't think I'm large enough to justify the effort, but if they did hack me, then my funds are spread around multiple exchanges and they can only get a portion of my funds. So with all that being said, please remember I am literally some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice for making any type of investment in cryptocurrency. If you haven't already, be sure and give me a thumbs up on this video. Also, don't forget to subscribe to the channel, and don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can join my paid program where I actually teach you how to trade. And again, to be clear, that paid program is not a paid calls group. I do not give out calls. It's a paid program teaching you how to read these charts and how to do this on your own so that you don't have to rely on other people. This is James with Crypto Common Sense. Trade safe.